So recently it was revealed what the real component is when it comes to autonomy, and we'll talk about it today. Tesla stock is down 14%. And is this a good buy right now? Let's talk about the bull and the bear case. Long-term bulls invest in Tesla less as a traditional car manufacturer and more as an artificial intelligence, robotics, and mobility company. Full self-driving and Optimus. Tesla's energy generation and storage business continues to show rapid expansion, offering a growing economic moat. And here is why investors sell. And it's about the premium valuation. The stock trades at a very high valuation multiple, leaving a little room for errors when it comes to executing its ambitious future goals. And then there's the automotive headwinds. Core electric vehicles EV delivery growth has slowed in key markets, and profit margins have faced pressure. Also, technical indicators suggest the stock faces short and long-term moving average resistance, with some analysts noting cautious short-term signals. And here is what the community of analysts say. The Wall Street analysts aggregate to a hold rating, though they are heavily divided, while median price targets suggest upside. Cautious observers believe the current price already factors in future optimism. Opinions on Reddit are deeply mixed. Many long-term investors speculate on high-risk ventures like robotaxis or potential SpaceX and Tesla mergers, while value-oriented Reddit investors warn about inflated price-to-earnings ratios. Tesla, TSLA, market cap is currently hovering around $1.2 trillion. Over the last 3 years, shares have soared by more than 50%. What many investors may not realize, however, is that Tesla's auto sales are actually declining. Last year, Tesla's auto sales fell by 8%. In 2024, auto sales were down by around 1%. Tesla's core auto manufacturing business is by no means cratering, but it does raise the question, why are shares doing so well despite declining sales and its biggest business segment? Well, the answer to this question is undoubtedly artificial intelligence. Autonomous driving is increasingly made it possible by rapid advancements in AI. This is allowing Tesla to target new growth opportunities with higher growth rates and superior margins than conventional auto sales. Some experts believe that the robotaxi market, for example, will grow into a $10 trillion industry worldwide over the long term. Now, Cathie Wood said, we think $8 to $10 trillion for the entire autonomous taxi opportunity throughout the world from almost nothing. And that's how quickly AI is going to cause these things to happen. Tesla's pivot from car maker to AI company has already been rewarded heavily by the market. Oppenheimer's Colin Rusch said, we believe Tesla will aggressively bring capacity online to enable AI-driven learning cycles and product design, manufacturing processes, and software integration into products. So it's not just self-driving robotaxis that AI will make possible for Tesla. Rivian, meanwhile, announced a majority strategic shift last December, one that will see the company significantly increasing its investments in AI to the point that Rivian no longer expects to be profitable in 2027. We believe autonomy will be a key fundamental long-term differentiator for our business. Now, Tesla enjoys many advantages that Rivian lacks. It has a brand name recognition, an influential CEO in Elon Musk, and a sizable capital advantage. But Rivian's stock price arguably reflects those advantages more than it should. Shares trade at a 3.3 times sales versus Tesla's 13.8 times sales. Plus, experts expect Rivian to grow its sales by 31% this year and another 64% growth expected in 2027. Tesla sales, meanwhile, are projected to grow by just 8% this year, with 16% growth expected in 2027. To be fair, there are also differences in each company's approach on AI and autonomy. Tesla has already established its own robo-taxi service in several metro areas of Texas. Musk has teased rapid expansion, but some reports suggest that Tesla's robo-taxi fleet is actually shrinking. Rivian, however, has positioned itself as a supplier to the robo-taxi versus a direct competitor. Now, earlier this year, it agreed to sell up to 50,000 R2 SUVs to Uber Technologies in a $1.25 billion deal. Uber is expected to use the vehicles for its own robotaxi fleet. It is speculated that as the robotaxi market heats up, more robotaxi operators will seek supply deals from Rivian. That's because many robotaxi competitors, while backed by big tech budgets, don't produce their own vehicles. Therefore, these operators need to source vehicles from third-party suppliers to grow. Now, Tesla is down 14%. Is Tesla a good buy? Well, here are your key points. Tesla's stock is down more than 14% year to date. Tesla's EV sales are rebounding in Europe, and this is what the Motley Fool said. As competition heats up and demand for electric vehicles or EVs in the US cools down, shares of Tesla have unsurprisingly fallen more than 14% in 2026. Simultaneously, Tesla's self-driving capabilities have come under intense scrutiny for both safety reasons and the pace on which they are rolled out. Now, is the dip in Tesla's price an opportunity to buy despite the challenges? Well, there is good news for Tesla investors. Sales in Europe are rebounding, and the appetite for EVs abroad doesn't seem to be as sluggish as it is at home. Now, Tesla's energy division, particularly in battery storage, is growing, and its revenue is likely to increase substantially in the coming quarters. Wall Street's consensus estimates suggest that the company's energy segment could generate $18.3 billion this year. Between energy storage demand and a rebounding European market, momentum is building in Tesla's favor. The slowdown in the US market could also be cyclical and due to a rebound, but that's a risk. Now, however, if Tesla goes the way of Ford Motor Company and General Motors by focusing more heavily on energy storage solutions, there's real money to be made in the short and intermediate terms, with potential for sustainable long-term growth on the other side. The incredible need for energy storage isn't slowing down. The energy storage market is expected to grow by nearly 22% over the year through 2033, according to the market research firm Grandview Research. Tesla stock is still trading at a premium even after the 14% dip. Now, Tesla's humanoid robot Optimus has largely been viewed as an artificial intelligence and robotics play. But according to Micron Technology, it could also become a major driver of demand for one of AI's most overlooked component: memory. During Micron's fiscal third quarter earnings call, CEO Sanjay Mehrotra outlined a long-term vision in which humanoid robots become a significant new market for memory and storage, making a striking comparison with today's vehicles. Now, humanoid robots carry 10 times the amount of memory as an average L2 plus vehicle. He said, "We expect a sustained, substantially multi-decade memory demand cycle to begin in the latter part of this decade." While Micron did not mention Tesla specifically, the comments come as Tesla continues to position Optimus as one of its biggest long-term growth opportunities. Tesla's Optimus could reshape AI memory demand. The comparison underscores how memory-intensive humanoid robots could become as they process real-time vision, perform inference, and plan motion. Now, the CEO continued advances in simulation, foundation models, and integrated hardware and software are accelerating the development of physical AI, creating a growing content-rich opportunity for high-bandwidth, low-power memory and storage that powers real-time perception, inference, and control. And if Tesla succeeds in deploying Optimus at scale across factories and eventually commercial markets, each robot could require substantially more advanced memory than today's driver assistant-equipped vehicles, potentially creating a new source of demand for suppliers like Micron. AI infrastructure extends beyond GPUs. Micron's broader message was that the AI infrastructure story is expanding beyond graphics processors. AI system performance is architecturally dependent on memory subsystems performance and capacity. Now, he said that adding the memory has become a strategic asset in the AI era. The company believes AI-driven demand is outpacing the industry ability to add new supply, with Micron now expecting tight memory market conditions to persist beyond 2027. We currently do not have line of sight as to when memory supply will be able to catch up with increasing demand, he said. That outlook suggests the next wave of AI hardware may not be defined solely by data center GPUs from NVIDIA, but also by the companies supplying the increasingly critical memory required to power everything from AI servers to autonomous vehicles, and eventually humanoid robots like Tesla's Optimus. How much more memory will a humanoid robot require compared with an autonomous software? Well, it is crazy. I'm just repeating this, but humanoid robots require roughly 10 times more memory than an average L2 plus driver assistant vehicle. Now, while modern consumer vehicles utilize varying amounts of memory, experts project future humanoid robots could carry upwards of 300 gigabytes of RAM due to the heavier demands of real-time spatial mapping, cloud syncing, and localized intelligence. To understand how this breaks down against current vehicle architecture, the memory requirement contrast across hardware's generations. Tesla cars versus Optimus. Tesla cars AI4 and HW4, the current full self-driving FSD computer built into Tesla vehicles, such as the Model 3, Model Y, and Cybercab, operates on a dual-chip architecture featuring 16 gigabytes of RAM per SoC, total 32 gigabytes, and 256 gigabytes of storage. Upcoming AI4 Plus updates will double this to 64 gigabytes total system memory. The Tesla Optimus robot shares large parts of its core computing architecture directly with the FSD vehicle computer, meaning both systems run on the same core inference energy. However, the physical constraints and diverse tasks of a humanoid robot dictate higher capacity requirements. Future projections. Now, leading memory suppliers like Micron state that future humanoid robots require roughly 10 times the amount of the memory as an average assisted driving vehicle to properly power simultaneously real-time perception, inference, and control. Now, coming back to whether Tesla stock is a good buy, well, it depends on your risk tolerance. Wall Street rates it a hold, even though it is trading near fair value as a legacy automaker, but it continues to be priced for explosive speculative growth in AI, robotics, and robo-taxis. I hope you enjoyed this video, and if you want to explore more about Elon Musk and his companies, you could watch this next. Also, don't forget to tune in next time with more updates. Thank you so much, and goodbye.